Broadcast. Welcome to another episode of the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here today with
Dan Hussey, everybody.
As usual, Dan Hussey, everybody. Today, we're going to be digging deep into the technical and maybe some fundamental aspects of the grain and livestock markets, especially today, maybe looking at some corn, maybe looking at some beans. Probably can't get out of this episode without talking about fat cattle and feeders. We're going to talk about some of the ways that you might be able to look at these markets and navigate this type of market movement. Before we start, we want to let you know that if you're interested in hearing about grain markets daily, you can sign up for our Ag Hedge hotline hosted by expert market strategist Ted Seifert, totally free, gives you the chance to connect with us personally if you have any specific questions about the markets or ag commodities in general. If you're interested in learning more about how this price action works and how to make this price action work for you, it's a great way to take that first step. Link is in the description below to sign up for that. Totally free, zero commitment. Dan, we always love that totally free part.
Price is right. The price is right. And that joke never gets old either. But truthfully, right? You can't ask for a better 5 minutes, 5 to 10, depending on how long Ted wants to go. But to update you every single day, right? I know Joe and I use it routinely because we're not always together, but it's a great way to keep your ear to the grindstone of all those things that are really going on in the world today. And that smart guys care about, right?
Absolutely. As always, keep in mind with everything we talk about here today, that futures trading does involve the risk of loss and should only be undertaken if it's suitable for your specific risk situation. Dan, I'll tell you what, there is no risk in my big weekend plans for changing out the struts and the shocks on my 378,000 mile motor vehicle. I'm sure nobody...
I can't believe I'm waiting for the day we hear the update of how that thing finally croaked, and then we're going to have to do a moment of silence for it here on the broadcast.
I'm sure nobody that listens, of the 3 or 4 people that do listen, I'm sure nobody is excited to hear about my travails in auto repair, but only mention that, Dan, to say I hope that you've got something more interesting going on this weekend than shocks and struts.
Well, Memorial Day, right? You'd like to say we'd all be heading to the pool, but it's chilly out. But we'll be hanging with the fam. We're actually doing my son's baptism this weekend, so those that are around will be getting together. Yeah, a fun weekend with family, kind of laid back, kicking back, just relaxing. I love Memorial Day weekend because there's usually nothing to do.
Except remember what Memorial Day weekend is all about, right? And God bless everybody who has somebody that they're memorializing this weekend and who maybe gave some or all for those of us here in the United States, protecting our way of life and this great country. Dan, I guess the place to start this week is probably beans. What do you think?
Yeah, I think so. You'd like to think that out of everything that we've seen in the last few weeks, they'd be the one place to be the leader. You know, I feel like wheat was doing wheat things, but between corn and beans, I felt like beans were kind of trying to get corn going, and corn just didn't know what to do. But once wheat kind of got its act together and we've seen a better bid throughout the week, it's left us, I think, with the other markets catching up to where soybeans have put us.
This is kind of blowing my mind, but I'm looking at this weekly update here, and every weekly result is positive. I can't remember.
When was the last time we got to say that?
Yeah, right. Yeah. As far as beans go, we opened the week at 10.50 and a quarter. The high was 10.73 and a half. Low was 10.45 and 3/4. Last trade I saw was 10.60 and a quarter in July beans. That was up 10 and 1/4 on the week. Funds are estimated to be long about 50,000 contracts, and we finished the day right there above all the spaghetti, except for maybe that 10-day moving average, above the 18 though, which us
really was support today,
right?
If you look at it. Yeah, lows of today at 10.55 and a half, that 10.55 even quarter, wherever you want to call it, 18 days, seems like that was the supportive technical area on the chart. Higher highs and higher lows for a few days running now. Yesterday, I guess, was an outside day, but closing higher. Today, not a green close, but higher highs and higher lows. I mean, ultimately, that's kind of a bullish sign. It's just You'd think on a day like this, you'd get that green close and you'd be thinking green shoots exploding higher. More than likely, though, this is just a signal the market is kind of bull flagging or doing some kind of sideways chop. But it is above, like Joe said, that spaghettification of all of these moving averages, the 55-day down there around 1040, this 200-day down there at 1045, the 100-day at 1049, and that 55-day, or excuse me, 18-day up there at 1055. There's definitely a little bit of a trend line and some other things to look at here, but while we're making higher highs and higher lows, at this point, I'm bullish above that 1045 area on the beans, and I get a lot more bullish, above the highs of today, as that would start to look like a breakout. Highs of the month and eventually take us higher towards that bigger resistance zone around that $11 mark.
And beans and everything else could be excused trading a little lower, especially in the overnight, off of that threat of a 50% tariff to our allies in the EU. As we were discussing pre-camera, maybe we think they're going to get that ironed out pretty quick, right? You could be grilling on Monday. And this is your quote. We could be grilling on Monday and half of that EU could be straightened out, right? I mean, that's very possible. I'm sure they don't want to be messing around.
Yeah, that was literally something I've been joking about. Is like by the time we're flipping burgers, that headline might be reversed. And that's just the type of market we're in. And that's just pure speculation, but that speculation is based off the facts and the statistics that, hey, in the past, all these other tariff issues have been resolved within like hours. There are phone calls going on between heads of state that have at least stayed off, like in the case of Canada and Mexico, for example, stayed off tariffs till a future date, but with the promise that we'll work towards some inevitable solution. So we'll see if that plays out with the rest of the EU here. There's obviously a lot of smaller fractured states there to have to consider. But if you hear some of the bigger countries, France, Germany, Belgium, already on the phone with Trump making plans, to kiss the ring, so to speak, by all means, it's going to be a thing of the past, I think, way faster than people realize. And hey, look at the stock markets today. We recovered well over, I think, 50% of the losses from that dive here. And that's an impressive kind of, I think, show of, I don't know, market's ability to shrug these news events off, if you will.
If you will, for certain. How about July meal? Opened the week 291.90. The high was 299.60. Low of the week 290.10. Last trade 296.20. Outside week up. Is that true? Outside week up. You got to fact check me on that. Up 430 on the week. Funds short 99,000 contracts. That fund position getting to be kind of a big deal in a market that
it is an outside green week. It is an outside green week. You're not wrong in that. To fact check you. Yeah, and back above that 18-day moving average, good. 55-day, it seems to be where that resistance, the 55 days kind of coming in there. Like you said, big fund position that may have getting cooked, right? At some point, funds get caught, and not just caught, but a position gets to the point where it needs to be tailored and culled. And we may be there with the beans. And I think there is also something to be said for soybean, I should say. There is something to be said that every price push lower here on this chart has been unable to really stay below that 300 figure for long. So, hey, if we're turning back up, if we're turning this back up, or we get back above that 300 figure, I mean, look at the resistance that's been there for the last month and a half. I think there's a good chance that it pushes all the way back up to 305, 312 rather quickly, with a really good opportunity or a chance for it to get all the way back up to 330 area. We got to clear this 55-day moving average is what it looks like in the short term.
Technical and fundamental context on that chart. Technical fact, new higher low.
Mm-hmm.
Off of that swing from back in April. Technical fact, we are chewing into, as you mentioned, that month of resistance there. No such thing as a quadruple top, right? Is what they.
But let's also be fair. That is the old support area. This 300 figure is now resistance until it's not. But I think once you get back above it, that's going to be a reason that anyone that was a seller below is getting out, and that's the start of the short covering rally.
I got you. Yeah,
or the narrative that I think begins it.
For sure. And it's interesting to see meal responding this way in the face of maybe some difficulty in Argentina. Flooding, and they're not sure the extent of that damage. Could be that they don't want to say yet, but as that information filters in, looks like the futures market may be pointing toward them having some difficulty and less meal to export because of it. Think that could be the case?
Sure. And there's going to be, 4 or 5 days now between now and the next time we really get to judge that, or 3-4 days now between that. So going out the week, my point is going out into a long holiday week when things are in question like that. You could come in with some very interesting developments come Monday evening, Tuesday morning. There's a lot of time between now and then for a story like that to continue to develop, worsen, or change.
July bean oil, as we wait for an update from the EPA, right? Opened the week 48.89. Got the handwriting of a doctor. High 50.30, low 47.95. Last trade 49.35. That was up about 42.
Yeah, I got the weekly chart up there. I got the weekly chart up there right now. Yeah, up 42 cents a week. No, right?
Long,
I mean, that looks
84,000 contracts. That long 84,000 contracts is about half of what they could do here typically.
Mm-hmm.
We probably want to double check that too, but
agreed. I don't know what the historical extremes are for oil,
right.
But that sounds about right. I mean, I would go with your gut on that.
Reporting for now, power, I guess.
Fact check test. Right. Yeah. The point that Joe's trying to make is we're not at that extreme yet. There's room for that to grow until balloon further. Definitely looks kind of like consolidation here until it's not. I don't love the fact we're looking a little head and shoulders-esque on that daily chart, with that right shoulder having maybe even formed with today's kind of gap up and fail back. But we did break out of that 18-day moving average, pulled back to hold it basically as support here into today's price action. So this can all just be rain found. We're also chewing through this old resistance zone and trying to stay above it. So now as support. So a lot of technicals on both sides in the short term and the medium term here kind of conflicting. But I guess that's exactly how and why you get one of these kind of consolidative structures above old resistance, making new support before continuing a trend higher. And that's the auction, right? Right now we're in that period of auction theory where we are discovering whether or not we want to stay up here. If it's a successful auction, the idea is it stays and then can continue on and test higher. That's what, where we are in the narrative of the technical picture, in my opinion. Because, back below the 18-day, back below the lows around 48, you're now talking about testing back into all this other support, the trend lines and the larger daily moving averages that we've been otherwise had held the chart up earlier this month and earlier this spring. So
chart shows a picture maybe that says this bean oil market would desperately like to see that 5-point something number as opposed to a 4-point something number.
Yes.
A lot of rumors swirling around this week, impacting. Certainly those rumors brought us down from that trend line high there, and a chart that's sort of behaving the way that it should under these circumstances, waiting yet again for information from the government to offer some clarity about how folks should invest or begin to work toward some of these renewable standards without the information about the renewable standard requirements. And it's probably a miracle that chart is holding up as well as it is under these circumstances yet again. The government's dragging their feet.
Yeah, maybe it could be the forward-thinking nature of markets, and certainly conspiracy theorists could also say maybe the market knows something we don't about what's going on in those behind closed door meetings and government agencies as well. We'll see.
That's a good point. It's going to be super interesting to see if these rumors hold any water once a lot of folks suggesting that this number is going to come out substantially lower than what the coalition had hoped for, and that will certainly be a total drag, but it would be nice to have the information one way or the other.
It absolutely would. And I think, though, that if there is something to be said for even if numbers come out lower than where they're expected, we need a starting point, right? Like, you just got to get the ball rolling. I'm a firm believer with this SAF movement that if you build it, they will come. You need to get it built. You need to get it going. You need to get airlines actually buying and using the stuff. The rest will fall into place.
How about this corn? Speaking of conspiracy theory, we opened the week 443.5. The high was 464.75. Low 443. Last trade 459.5. Up 16. I was not expecting to see that. That's pretty cool. Funds short 83,000 contracts into that up 16. And speaking of chewing, we're chewing on the 200-day moving average in the July contract above both the 10 and the 18-day.
Yeah, a little different there when you look at December. An old crop, kind of a old trend lines didn't really break their supportive trend lines, but in new crop, their old trend lines didn't really break. But in old crop, July, we did break below those trend lines, and we're below the 200-day and finding them now like as resistance. Also now overbought in that daily RSI, so not a great look when you basically break through what is otherwise a supportive area, and now finding it as resistance. So, I mean, I don't want to be a doom and gloomer, but hey, heads up, folks, this is not a great place for corn to have just stopped at, if I'm being perfectly honest about the situation. I like that we're back above the 18-day. That's a good short-term signal. But if we slip back below today's low and back below that 18-day, now you're back below the 18-day. Now you have failed to break back above the 200-day and the downward upward sloping trend line, now resistance, and failed to break back into this old range. So like there's a glimmer of hope here on the chart, right? That we could be turning and heading higher. But then there's this other like, oh gosh, if we don't actually like push through and get back up above this 55 into the 100-day here relatively quickly, this could also be a reason, a place to sell corn for a move to new lows, for a swing to new lows, if I'm being honest on the technical picture. So be wary of that. And, in the short term, today's high and low actually become kind of a very important short term, in my opinion, directional play for corn.
And again, you've got a chart here that is operating within a technical and fundamental context. Technically, funds have turned sellers in a very aggressive way, sold at least 100,000 contracts in I don't know how many days, and have not gotten a lot of bang for their buck with those 100,000 contracts.
Which is incredibly impressive, right, for how well this market's held up.
Changed hands very easily with no movement in the market. Your commercial entity was thrilled to take those 100,000 contracts off of the hands of the commodity trading, alpha chasing hedge fund, right? And you have to recognize that chart in this area is maybe saying, hey, we recognize what's going on in South America. Your safrinha corn crop, for all intents and purposes, going gangbusters. However, if it doesn't rain here in the United States, and so you're at a tipping point. If it doesn't rain here in the U.S., you're going well above $6. If it does rain, boy, that's a $3 and something contract. And so that's kind of right where that price action in July points us. December, maybe they have to add some risk premium back to that contract that they stripped out.
And I think you're seeing that,
weeks.
Right? There's a reason we didn't break down below that trend line and stay there.
Because the risk is not gone. The risk is still there. Yeah. And you see some talk about higher carryout numbers. It's hard for me to see those carryout numbers increasing with the level of exports and usage that we have here in the United States, but everybody's got an opinion. I just wonder what price level. So what you highlighted, my tongue is bleeding because I didn't want to say, hey, Dan, look at the way we were overbought on both of those rallies previously here. We stayed overbought for quite some time.
Oh, yes.
If we stay overbought for another week or two, that could put this contract squarely in $5 territory.
Yeah, and you're talking December there.
Either way. I think, and I don't necessarily have a horse in this race because I'm long calls from way higher, right?
And to Joe's point, when you look back to December through March, right, this is the period he's referring to, right? It's just because you're oversold or overbought. I'm sorry, an indicator doesn't mean it can't be overbought for an extended period of time and continue to run up, right? This is a great example of that on the chart right here. No doubt. And, but then I'd also caution that, hey, with other periods, right, every time there's a high, you're usually overbought, right, at the same time. So, but no doubt. Good point. But you get above these levels. And like I said, the look of old crop here is a little bit different than new crop, right? You're below some technical levels you don't want to be on old crop. New crop, you're not. You're back above the 200-day, you're above the 55-day. The 100-day is there. In the 50% of this whole decline is right around this 455 area. But you get above that, you're back to 470, 480. To your point, you maybe even pushing to $5 very quickly in a condition where we can make a case for how you get one of these legs higher. And, the 3-day pullback that we've seen or 2-day pullback that we've seen, that could be any one of these little 2-day pullbacks in this whole leg higher, right? And you just want to pay attention to, in the very short term, then how does this little range between 456 the 448 play out? Does it start pushing higher? And then you've got that run up, right?
Help me understand the spread
too. Roll over.
Help me understand the spread too. So you would think that with the Safrinha corn crop on tap and what, for all intents and purposes, is the 96 million acre crop at a 181 USDA average yield, well, you would think that new crop might be under pressure and old crop would be be holding up. But it seems to be the opposite of that. What's going?
Correct.
Give me a guess on why that's happening.
Yeah, the demand for the corn right here and now is in question. I think that there's questions still about tariffs and demand from places that, honestly, I feel like it's short-term, near-term demand, and that usually equates to export demand and tariffs to some extent. I just think there's some fear out there. I don't think that that's something that should be there for long, because when you start to consider a weather market, and actually, well, you might make a case, the consideration of that weather market could be a good reason too, Joe, right? You get that Western Corn Belt starting to really get dry. And I think there's some fears that, right, if you don't start to see some rain in other places too, you could start to get that drought narrative forming. And that's where they're going to definitely, I think, build some of that weather premium into old crop here. And then coupled with, in the short term, if there's concerns that, into new crop, if there's concerns that old crop demand isn't going to be there for our export market for the next 6 months, well, there's a good reason to be selling July, buying December.
Certain weather groups still pitching the idea that it's going to get dry and warm in a good chunk of the Corn Belt, except for maybe the east and some of the southern sections. But your big corn growing areas could be under some heat and dryness pressure here before too long. And so it will be interesting. Weather's very difficult, much like the future, to predict, but it would seem that all that stripping out of that weather premium has begun to be reversed.
Yes.
How about wheat?
It would seem to be.
How about wheat?
Oh, what can you say?
7. Well, it's getting interesting here in wheat. 556 and a quarter was the high, low 524 and a half. Last trade 542 and a half, up 17 and a half on the week. Funds short a whopping 121,000 contracts. Open interest declining. I saw Service today. Folks might have been Hightower talking about, make sure you double check this open interest, because if your rally is based only on short covering, doesn't quite give it the staying power that you would hope to see with new open interest running in. But with that 121,000 short position, you would expect for the funds, and especially they have been making money in wheat being short for a very long time. Nobody is as uncomfortable about making money as the fund trader participant. So could be that this declining open interest is the precursor to increasing open interest, as everybody who's sitting back, who's been burned trying to be long wheat 4 or 5 times in this downtrend, comes rushing back to the table. Do you think?
Yeah, it's starting to give you a good reason to think there's a good reversal structure happening, right? Downward sloping trend line starts to break. 18-day, you're back above it. You're testing the 55-day. You start to see those technicals flipping, right? If you want to start to chew on the nerves of the short, right, this is the way it happens. Every time you get above one of these, a little bit more of them pinch out and you start to get worried. Overbought conditions, though, in that daily RSI. So only back into kind of that old supportive area, that 560 area that had been basically support all the way into the end of the year. So, definitely want to see it get back above there before I get way too excited. But, it's promising. And we'll see if the funds continue to be spooked. But like you said, Joe, they're only giving themselves more room here to build into a short if they want to.
Head and shoulders, if you look at it from a head and shoulders bottom perspective, maybe we come down here and build a little bit of a right shoulder. You've got your neckline in place now. And neat thing about head and shoulders, pretty powerful pattern, right, for reversals. But also, should this head and shoulders develop and then fail, very powerful continuation pattern. So any way you slice it here is good technical information.
Something to watch for,
on tap, right?
There's a narrative to continue to watch.
Absolutely.
Cattle?
Jan, what did we forget? Oh, cattle. Yeah, we were trying to get out of here without talking about cattle. Open the week, 212, 57 and a half, the high 216, low 212.05. Last trade 215.80. Here again, cattle up 3, 57 and a half. Dan, no capitulation in cash. Box beef numbers are great. Export numbers were better than decent. The futures markets.
If we were here 40 minutes from now, we could give you the cattle on feed report numbers, right? But
placements are the key
our
there.
way through understanding those.
Right. Placements are the key there. Basically, futures markets pitched a correction and nobody else showed up to the party. No cash trade.
Well, I shouldn't say no one bought it. Everyone bought it, right?
Yeah, everybody bought it. And
no, but right back down into that 18-day. I mean, it was a technical pullback into a technical level. You wish you would have played it simple.
Yeah, on the way. The problem here is that when this does break, boy, is it ever going to break. But fundamentally, I just don't see how that can happen. And I'm starting to feel that is a great way to look at this market. Fundamentally, I cannot see how you could maintain any kind of break. And Dan, I'll tell you, historically, me not being able to see any fundamental way to sustain a break is a great way for a break to be sustained.
Yeah.
Who can we talk to that can give us a clear path to cattle trading back down below that 2 level, right? Nobody. And lack of development with heifers, they're getting $3,200. There's just big money to be had here for these animals, and no incentive to hold any back. So you can't fix this. Maybe you can fix it with cattle with feeders from Mexico, but that's not happening. Screwworm situation. I'm not sure what's coming across the Canadian border, but I'll bet it's less than it was. And so I don't see an end to this, and I'd be looking for the boxes. You're coming into a period here historically, seasonally, where you would expect to see between now and the end of June, where you would expect to see a turn in cash prices. But I guess we'll have to wait and see if that shows up.
That seasonal cooling off period that usually comes about this time of year. We're just not seeing it yet. And now we're heading into peak grilling season. Everybody's going to be using that for an excuse for demand and what have you, but it's been there all along. At some point, I do think we're going to see that capitulating top. I don't know, maybe it's going to be a slow rounding thing. I don't know. It's just every time you think it's about to turn over, it just keeps on going. But I think there's some clear technicals in the chart. The market is respecting that 18-day moving average here on the June live cattle, something to be important to watch. We had I can't tell, was that a gap? Intraday, there's a little bit of an intraday gap here to watch for on the charts down there at 214s in the June live cattle as well. Did we talk feeders at all here yet? But August
open
feeders,
the week 297.60, high was 301.12.5, low 295.57.5. Last trade I had was 300.37.5. That as well up 277.5 on the week. Pretty stout weekly numbers coming off of this correction, huh?
Yeah. And still pressing. It's interesting to watch the fats kind of, I think, being a leader here too, and still this late in the rally. It makes me wonder though if that isn't a sign of nearing a top here. But back above that 18-day here, moving average the last 2 days, really fighting to stay above it, getting back up to try to fill that island gap. I mean, this was, by all intents and purposes, is a great reversal signal. But what we need to see now, back below 295 for me on August feeders gets really hairy. I think 295 is a great level. If we're going to talk about an idea for producers this week, and hey, even row crop producers, you can pay attention to this idea too. Is hey, the next time you're back up at $6 corn, when we talk about how 595 is a great threshold to protect, you pick that 295 strike, you set yourself up by buying a put there. Then you say, okay, I'd be really floored and happy if I could sell 315 or 320, sell a call up there to help pay for it if you want. The idea being is just when you're way up here and you can technically see on the chart, if we get below this 295 level, I may not want anything to do with it. That's exactly the type of level a producer should use to try to think about managing their risk with, whether or not it's setting alert to sell some futures or get some insurance done if it starts to go below it, or just picking up a put as a proverbial insurance policy. A great way to think about managing a risk, even in an uptrend like this.
And it comes to my mind that it might be important to highlight that in the story about the boy who cried wolf, the wolf eventually did show up, right? So we feel like we've been crying wolf here, and I'm sure that everybody that has to talk about cattle feeling the same way, waiting and warning and waiting and warning. And if you are buying these high price feeders and the music stops and you can't find a chair, that's going to be a very painful experience. And so,
and Joe, I think you just hit the nail on the head. That's how you keep That's how you keep the machine going at these high prices, right? When margins are able, you need to lock and protect your margins in this environment, right? Because you're having to invest so much more capital into your production. And in this case, feeders are more expensive. Your working capital that has to go into that production line is higher, just across the board, right? And it's only going to be more, that's only going to be higher still. There's a great way that we can talk about protecting that downside risk of all your invested capital in your business, right? That's what we're talking about here. Not speculating, not guessing on the direction of cattle, protecting the investment you've made. And that's the important thing to remember at these prices.
Valid point. Because when the music stops,
To Joe's
it's
point,
quite a thing.
exactly. Right.
And
You don't
just
just spot holding the $300 head.
just because we can't figure out what could make that happen doesn't mean that it can't happen. And so folks would be wise not to be lulled to sleep up here. And I'm sure, listen, the idea that we're going to be lecturing a cattle person with all those years of experience, they know full well how this can end. And so
100%.
by no means are we trying to tell anybody how they should think, but by the same token,
No, we're the angel on the shoulder reminding you, right, of the right decision to make.
Right. A respectful
when you don't want to.
Right. Exactly. Sometimes, a lot of times we don't need the insurance, but sometimes we most certainly do. And with some of these LRP contracts and some of these other innovative ways for producers to try to manage risk may not get you all the way there. And so certainly wouldn't hurt to have a conversation or break out a sharp pencil and make sure that you do have the coverage that you think you have and what you might need to do to supplement that with the options market as well.
Absolutely. That brings us into a long weekend, which I think we can all agree is going to be a well-deserved one after these crazy markets. But like you said earlier in the broadcast, important to remember those that have paid the ultimate sacrifice and given us the reason to sit around drinking beers and grilling hot dogs and cheeseburgers.
Amen to that, Dan. And so here we are too. Question of the week from Carter. It's taking a bit of a serious tone after the rom-com probe last week. If you have one, what is your favorite Memorial Day weekend tradition?
We used to go to, with my wife's family, we used to go to, well, they would go to, and I've joined them. We'd go out to, I want to say it's Lincoln Cemetery, just west of here. It's to my knowledge, it's the only national cemetery in Illinois. And her grandfather's buried out there. So kind of cool to go out there. They have huge services this weekend. It's really, really cool to go see all the local VFWs and everyone comes out in their full regalia and does a full-on service for the whole cemetery this whole weekend. It's really cool. Go see the color guards and everything there. And this one is kind of unique in that they have some American Indian companies that based out of Illinois, I guess, that are all buried there as well. So some cool, unique things to see. Anyway, that's cool. And other than that, hanging with family, a new tradition of mine, we're probably trying to go see my grandfather's burial site, another World War II veteran. And I know that's those of us that have family members try to remember, and those that are still in active military too, try to remember those things and be together.
Funny, we've got the same story, a little bit of a speed run in these next couple of days to make sure that not only both grandfathers, but uncles, other friends of the family, that we've got at least some flags displayed, and a quick visit to remember what they have done for us. Not every year, of course, but I think from what I understand, this will be one of those years where we put some miles on the car to make sure we make the right stops and visit those who have gone before us. And maybe we'll grill some meat, huh? No, we can't imagine.
Yeah, right. And justify these high cattle prices, everybody. Let's go.
Exactly. Can't imagine what we're gonna do as a family to do our part to keep these prices high, but I'm sure it'll be significant. Dan, I hope you guys have a great weekend, you and the fam.
You too, Joe.
And everybody else out there. Enjoy your time.
Yeah, and thank you for listening to the Zaner MarketCast. If you need more, just because you can't get enough of us, you can follow us on LinkedIn, right here on Facebook, LinkedIn, and Twitter at the Zaner Group. If you have any questions you like right here and answered on the show, fill out that instructions and that's available to you in the description. I'll get that answered here on the air. Thanks again, and be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you all after this happy Memorial Day weekend. Take care, everybody.
Chicago Pope bless you all out there.